Hello and welcome back to the course. In this lecture, we are going to continue working through the operations of our company through its final year of operations. Since many of the operations are similar, you can try to do everything yourself with the template that is attached in the resources part of this lecture, and then you can continue watching this lecture to the end and compare your results with the results that I have here.
So our company continued working through its second year, 2024. So what happened during that period? First of all, it paid $100,000 to our suppliers for the goods that we bought in the previous year. You remember that we purchased the goods on credit. We didn't have to pay anything for them in 2023, but rather we have to pay for them in 2024. Then we paid $10,000 in bonuses to the warehouse employees. Remember, we promised them bonuses but didn't pay them in 2023. Then, throughout the year, it sold off all of the remaining inventory for $300,000 in cash. Then, again, you remember that we didn't collect money from some customers, so we did that in 2024. We collected $40,000 for goods sold in 2023. Then, we had some wages for our employees, so we paid them $120,000. That includes all the bonuses, so we do not owe them anything. Then we terminated the warehouse lease at the end of the year. You remember we paid for it in advance, didn't have to pay anything in 2024. And then, for some reason, the owners decided to close the company, distribute the remaining cash, and end the life of the company.
So we begin with the second year of our operations. We have our beginning balances right here, the accounts that we had before. And let us go through the operations. It's much easier the second time around. The first operation is that we paid what we owed to our supplier. So we have minus $100,000 in cash. And our loan from supplier also reduce it to zero. The second operation is that we have to pay the bonuses we promised to our employees. So it's again, we paid cash, $10,000. We had, as you remember, the salary payable, that's our debt to our employees, we also reduce it to zero. The next operation is that we sold all of our remaining inventory. We've got $300,000 in cash. That is our profit, as you remember. And of course we have to get rid of our inventory. We sold all of our inventory, so it is reduced to zero. And this is going to be our negative profit. This is going to be our cost. Then, again, you remember that we didn't collect some money from our customers for 2023, so we get them in 2024 by reducing our accounts receivable. Again, this is the operation. The next operation, we paid our employees' wages. First of all, we have to calculate their salary payable of $120,000, and this is going to be our cost, first of all. And when we have to pay cash, minus $120,000, and we will reduce our debt to zero. Okay, what's next? There is the same operation as in the previous year, the end of period operation. We have got through our second year of operation. We've paid the rent in advance, so we have to clear our rental asset. And again, it is going to be, as in the previous year, our cost. So we see our intermediate balance. Okay, you see that we have $340,000 in cash. And on the other side, the sources of this cash was $240,000 that we contributed in the beginning of the first year, and there is this $100,000 which is supposedly our profit. And at that moment in time, we would like to close the business, repay all the remaining cash to the shareholders, and we are done with the business. So the final operation of our small company is to repay the initial contribution and dividends to our shareholders, and we are going to balance it on the other side. And you can see that that's it for our company.
Let us make our financial statements for the second year, for 2024. The easiest one is the balance sheet. As you can see, since we are liquidating the company, in the end it doesn't have any assets, it doesn't have any liabilities, so there are all zeros. So in order to make our balance sheet, we take the balance sheet for the previous period. That's the first number. You see, the first column is as of the 31st of December 2023. And basically then we show the balances at the end of the current period, which is 2024, and they are all zeros. We can get some more interesting information from the income statement data for 2024. Here we get the sales. You remember the sales of $300,000, and the cost of sales, our inventory, which was sold out completely and which was purchased for $50,000. We had a gross profit of $250,000. Then come our fixed costs. In our case, these are the personnel expenses of $120K per year and rental expense of $60,000. And in the end, we got a net profit of $70K. The cash flow statement. We group some operations. We group cash received from customers, which we had in two operations, $340,000 separately. We group them into one line, $340K. Cash paid to suppliers, what we paid for our inventory only in this year. Cash paid for rent is zero because we paid all our rent in advance. Then we have our cash paid to employees, $120 for this year, plus the $10,000 in bonuses we owed them from the previous year. And we have our total cash flow operations of $110,000. Then we distributed $340K to our investors, and since we had some cash in the beginning, in the end, we had a zero. In the end, I would like to draw your attention again to P&L versus the cash flow statement. You see, in our company, in the first year of its operations, the cash flow from operations was negative, but we had a positive profit. And in the second year of operations, our cash flow from operations was much higher than the net profit for the year. But in the end, they all converged. If you compare the total of cash flows from operations for 2 years for our company with the net income for 2 years, they're all the same. They're all $100,000. What does it mean? It means that those two measures, cash flow from operations and net income, are very much connected. They're intertwined. You cannot have constantly positive cash flow from operations with negative net income. At a certain moment in time, you will have a negative cash flow from operations. You will run out of money, even if you have a positive cash flow at the moment. On the other hand, if you are profitable, you should not be very much worried about negative cash flow from operations. It can be a temporary thing. You should worry about profit. I hope now you're comfortable with writing down simple accounting operations and making simple financial statements. In the next lecture, we will introduce certain accounting concepts that are very useful to be familiar with.